Good evening, everybody. My name is Val. I'm Cardano Stake Pool operator for Pool LEGA, and this is a now monthly delegators call where friends and delegators can join to review the pool performance. We also look at what's happening in the cryptocurrency market and what's happening in the Cardano roadmap, and you have an opportunity to ask questions and join the discussion. So in the past few meetings, I've been posting pictures of my dog. This is Jigs, and he just had his haircut and wash, and they had this display at Pet Supplies discount store with Santa for dogs. So I thought that it would be cool to take a picture of Jigs with a Santa Christmas background. So I either have pictures of my dog or I have pictures of the fish that I catch, but recently I haven't caught any fish since the weather has been pretty bad. So there you go. I go by Val. Feel free to interrupt me at any point in time. Today is December 2nd of 2021, and I saw this. I thought it was kind of cool for those who are into patterns. You won't see this again. So agenda for today, we'll talk a bit about the Bitcoin market, the overview of the current market trajectory and where I think we are in the cycle, what's been happening with the Omicron FUD, and gave all markets a bit of a scare. Also had an impact on crypto and Bitcoin prices, so we'll look at that. We'll look at the overall crypto market cap and how it's growing, and the proposition that crypto market will surpass other asset classes in the coming decade. We'll look at Cardano ecosystem news. There are some news with DEX and Cardano-based stablecoin roadmap updates and what's coming. I have some updated stats on the ADA user growth and wallet growth, as well as some data on the stake pools and rewards. And then I have a repeat of a section for those who are new to the space, how to set up staking wallet, how to keep it secure, and what you can expect to earn. We'll look at the stake pool performance over the past 6 epochs, and we'll talk a bit about where rewards come from and the current inflation rate on the Cardano blockchain. And then I have the regular ADAnomics update on the Cardano holding economics and number of pools, what they're making, typical rewards in the past months since the last time we've met. But if there's any other topics that you'd like to talk about or have a question on, please feel free to interrupt at any time. So last time I showed this graph. This was the overlay of growth of price of Bitcoin in the past few years, overlaid over the price of gold in the 70s. So as you may know, the inflation ran pretty high in the 70s and early 80s in US dollar terms, and many are calling Bitcoin now today's gold, and gold hasn't really done well in the past few years. The price has been hovering around 1900 per ounce, and even though the US government has printed trillions, the gold stayed pretty consistent in that price range, where Bitcoin tripled in the past year in prices and has been consistently doubling every year overall. So this is cumulative inflation over the last 100 years, and what that means is when you hear people talk about inflation, it's typically annual inflation rate. And here you have cumulative inflation, which means if you look at 2,500% by November 2020, it means that since 1910, the dollar lost 2,500% of its purchasing power. So this is something to keep in mind. If you go back to the price of gold versus the price of Bitcoin, those who are calling Bitcoin the gold of today and an inflation hedge have a pretty good case. So this is gold adjusted for inflation. So which means that if you took today's price of gold and counted backwards to adjusted it for inflation in the 1978, 1980, when the inflation was peaking, then at that time, the price of gold would be around $2,700. But in fact, we know that it was cheaper back then, but now the price of gold, inflation adjusted, is roughly over 2,000, but the real price is around 1,900. So gold hasn't really been a good inflation hedge and hasn't given holders of gold any sensible protection. And it's partly, many believe, due to the fact that the gold producing countries are not telling the truth about how much gold they produce and they mine. So the biggest producers are in Africa and Russia, and those countries, Russia and African countries where gold is produced, it's difficult to account for the real production rates. And also gold has issues with transportability. So it's difficult to transport, and it's difficult to transfer it from one person or entity to another. So this is from the Rational Root, and if you don't follow him on Twitter, I highly recommend it. He makes some pretty good graphics. So this is a comparison of the Bitcoin cycles in 2021 in the current cycle versus the previous bull runs, so to speak, in 2017 and 2013. So in 2017 we had 34% drops in the middle of the cycle, and 40, which lasted 41 days, and we had a 12-day drop in 2013. So and he shows how many days into the cycle we were at that point. So day one would be where the bottom of the cycle, the bottom of the price was. So only in retrospect we can go back and look at when we had the bottom. But you can see, if you compare the 2021 cycle to 2017 and 2013 peaks, you can see that the cycle is lengthening. And if we are going to have a peak in market capitalization in this cycle, then we haven't gotten there yet, and we probably we may be a few months away. So there are several theories. There's a lengthening cycle theory that says that the cycles are getting longer. There is the super cycle theory, which Dan Held proposed, which states that we're currently in a super cycle, which is going to be longer and bigger than anything that we've seen before, and it's mainly due to the amount of fiat money that's printed by all governments in the world. And there is also a theory of no more cycles, which means that the Bitcoin and cryptocurrency market has grown so much that the previous cycles will not repeat, and we're no longer cyclical, but we'll be in this just repeating trajectory where certain projects will have more inflows, and they will grow based on the user growth and growth of liquidity. So those are the three main theories. Which one of them will become his theories This is a stock to flow model. Thanks, Mike. This is created by Plan B. Some of you may know him. So this model is based on the 4-year Bitcoin halving cycles. So Bitcoin undergoes what's called the halving, where the reward is cut in half every 4 years, which is a contributor to the cyclical theory. So the rewards get cut in half. It cuts the miners' subsidy, so they receive half the Bitcoins that they usually would, which cuts the amount of new Bitcoin in circulation. So this chart came out from Glassnode, who is an on-chain analysis firm, and they have updated the inflation rate for Bitcoin. So you can see that initially the inflation rate was very high and it was easy to mine, and then with every cycle, the inflation rate was cut. So right now we're somewhere around 2.5%, 2 to 2.5% Bitcoin inflation, and this is the new Bitcoin that enters circulation. So there are currently approximately 100 million Bitcoin active addresses. So that's number has doubled in the past year. We were around 50 million a year ago. So as the number of users is growing rapidly, we have also inflation dropping. So fewer Bitcoins are added. So one of the topics that the Rational Root covers is the cross asset flow. So he talks about other asset classes that Bitcoin will be catching up to in the coming years. So he proposes that by the end of the decade, Bitcoin will surpass or catch up to silver, gold, and real estate. So his preposition is for Bitcoin to take over those asset classes, like real estate is $100 trillion asset class. It will take another decade, and he talks about the additional number of blocks that have to be minted. So you can see that in the spiral, how long that might take, and the kind of the waves that it would take. So here is 1, 2, 3, 4. So 6 more waves. So he thinks in about 6 more cycles, this can happen. So Bitcoin will catch up to a real estate market by capitalization, which will give it, with $100 trillion market cap, it will be 100 times higher price than it is right now. So he's talking about 50 to 60 million dollar Bitcoin, which is probably, it's possible, but it's going to take either a lot of money printing or a much longer period of time. And this is another one on-chain from on-chain analytics on the cycles. So we're over here right now somewhere day 1080, and the current cycle is purple. So the previous one in 2017 is orange. And if you remember, in 2017, somewhere around November, December, that was the peak. And then in 2018, January, February is when the prices started to decline, and a lot of Bitcoin and Ethereum, other assets, reached their peak and liquidated. But here with the purple line, where you can see that if the markets are extending in their length and they're also don't give as big returns as before, then the cycle will be longer, and we'll probably have another 3 to 4 months until we reach the peak. So what will be the price at that point, and how much longer, exactly how much longer it will take. So he's projecting $140,000 per Bitcoin, and the date that he puts on this, according to his calculation, is end of March, beginning of April. And coincidentally, that's somewhere around tax season, and we know that in March, historically, in March, prices go down because traders and investors need to liquidate some of their crypto assets to pay taxes. So it would coincide with a tax date, and it will also, this graph would coincide with the lengthening cycle. So if we go back here and we count, to get a few, 60 to 90 days past the previous peak would land us somewhere in March. So that's why I think he put this date here, end of March, beginning of April, and this parabolic rise to 140K. So, any questions on that? I do actually think that we will get there because of the scarcity and the amount of money that's being printed by both United States, the European Central Bank, and some of the other countries. Typically, we see when large amounts of dollars are printed, it takes, because of the velocity of money, it takes between 3 to 6 months for that money to hit the market. And we know with the infrastructure bill, and in addition to the infrastructure bill, about $1 trillion was printed in Q4 by the U.S. government. So it will take about 3 to 6 months for that liquidity to hit markets, and I anticipate that it will produce more upwards pressure in both cryptocurrency and traditional financial markets. So that also coincides with the March and April dates. So this is kind of the slope, the recovery slope, and the tests of the market cycles. And you can see that days, from zero, he's counting from the bottom, or the lowest price. So right now we're somewhere here with this pink line. So we hit 233 days after the bottom, which was, that's from this spring somewhere. We've touched that point 133 days, which was longer than the previous cycles, and we're in this recovery slope. So the slope of each market cycle is lower. So we may get to some point where as more money comes into this market and more people come into the market, this slope is going to become constant, and we won't have any more such significant markets where the Bitcoin makes 21x like it did in 2017. So that's possible. So this is new from ADAnomics, and this is an updated Bitcoin holdings by public companies. So you may have heard when we had this Omicron scare, Michael Saylor declared that he bought 7,000 more Bitcoin. So he just keeps buying. So he has right now somewhere around 114,000 Bitcoins, and we know this is from Tesla. So Tesla owns 37,000 Bitcoin. Galaxy Digital is third, and then Square, that's Jack Dorsey's company, and he's stepping down, as he announced, from Twitter to focus on Square and Bitcoin. And then you have a few other ones, Coinbase, Riot Blockchain. And so you can see that all corporations that own Bitcoin and hold it in their treasuries hold about 202,000. So that's quite a bit. Square is now called Block. Yes, thank you. I heard. So you've got the renaming of Square and renaming of Facebook. So some things that I thought would never change are actually changing. I must be getting old, but yes, it's now called the Block. And this is an updated deficit, revenue, and debt comparison. So you can see that as in the coronavirus era, as the revenue is shrinking, the deficit is growing. And after COVID, where we've just earlier this week, we hit a $29 trillion debt for the United States. So as all of that is happening, so this is the United States revenue. It's 3.4 trillion for 2020. 6.6 trillion in spending, mandatory 4.6. So that's money the government has to spend, and discretionary 1.3 trillion, and interest is 300 billion. So what does this mean? The government always prints more money. It never prints less. The past 20 months, we've gone parabolic on the printing of the money. So you have to, or I suggest that you think about where you put your hard-earned money, because the government will take 35 to 40% with taxes from your paycheck, and then at the end of the year, they'll print another 30 or 40% of the monetary supply, thereby reducing the purchasing power of your savings. So if you have any savings, would you want to keep your savings in the currency that's devaluing at such a rate and is being printed with such a speed? So when countries do that, here's what happens. So this is an example from Turkey. In 2017, it was 3.7 Turkish lira to the dollar. And now it's 10 Turkish lira to a dollar. And some like real estate and like hedging in real estate against inflation. This is what happened in Turkey. Since 2017, the real estate market prices grew by 35%, but their currency devalued by 300% to the US dollar. But if you look at what it actually devalued to gold or Bitcoin, it devalued much more. So this should be concerning that this is where the dollar and the euro are going at the rate of the current monetary expansion. So this is also from Stock to Flow, Plan B, and this is one of his new graphs that I have just stumbled upon. He made this in the past few weeks. This is his theory of Bitcoin hyper Bitcoinization, which means that eventually in the 2030s, Bitcoin will take over all financial markets and all asset classes, and everything will be valued in Bitcoin. This is a very Bitcoin maximalist approach, which I don't support, but this theory does exist. And if this does happen, then it will make fiat currencies irrelevant. So right now we're somewhere here, and we're 2022. We haven't hit 100,000, but he's talking about $100 billion per Bitcoin price, which I think is far-fetched. But I do think that Bitcoin will pass, somewhere here, $1 million by 2026. I think it's feasible, but for it to hit $100 billion, the dollar has to devalue, significantly. for that to happen. We have to be in hyperinflation, which could happen. But whether it will happen or not, that's something for you to consider. It's the writing is on the wall, so to speak. So we'll talk about Cardano next. So Cardano is an open platform that seeks to provide economic identity to billions who lack it by providing decentralized applications to manage identity, value, and governance. So Cardano is a smart contracts platform. It's also native currencies platform. And there are some additional features coming to Cardano, which I will cover in a little bit. So the native token of Cardano is ADA. Cardano is a proof of stake blockchain with a maximum supply of 45 billion. The supply is inflationary. So we have an inflation rate of approximately 2% right now. And there are reserves, and reserves are moving ADA from the reserve fund into the circulating supply. It's a energy efficient blockchain, and it has a big advantage. It doesn't use a lot of electricity. It's governed by the community, and it's a smart contracts platform that has potentially unlimited transaction throughput, which supports NFTs currently, and will soon support a DEX, decentralized exchanges. So Cardano has scarcity. It has a cap of 45 billion that cannot be changed programmatically. Just like Bitcoin is capped at 21 million, Cardano is capped at 45 billion. It's divisible. One Lovelace is 1 millionth of ADA. So Bitcoin has Satoshi, which is 100 million. ADA has Lovelace, which is 1 million of ADA. There are new uses coming to Cardano all the time. It's transportable. Cardano now has ADA Lite wallet, has a Daedalus, which is a full wallet, and a mobile wallet called a Uroi. It's durable. Cardano network has never gone down. You may be surprised to find out that others have. Solana network has been taken down twice. Bitcoin has never been taken down, but other blockchains like Ethereum Classic has been known to have connectivity issues. And both Bitcoin and Cardano have never been compromised or counterfeited. So it has some significant counterfeitability protections built in. So right now, Cardano is still number one in returns over the past 18 months since we had the flush of the market with a COVID scare in March of 2020. So Cardano produced the highest returns of all cryptocurrency projects, 7,362%, followed by Solana in second place and BNB in third place. Ethereum in fourth place with 4,100%. So still, Cardano remains the best performer if you if that's what you're looking for and you account for it in US dollar return terms. Also, on November 15th, we had some updated transaction stats. So Cardano was the second in the number of transactions behind Bitcoin. And then it had a double the transaction volume of Ethereum, if that tells you anything. I think it's pretty cool. And we have some updates on the ecosystem. There are some DEXs coming. I know that in December and January, Sunday Swap, which will be on Cardano, and Raven DEX. So they're coming online, and there are a few other ones. So we've had smart contracts released in September. Decentralized exchanges are coming in December, in January. And there are some more updates coming. There's a node and wallet update coming in December to accommodate for the DEXs and a few other features. And the next big release that will be coming is a Hydra to increase the transaction capabilities and output of the blockchain. So the Cardano ecosystem is constantly growing, and there are new uses and new partnerships that are coming online for the blockchain, which is pretty cool. So I'll be going over some of the pool stats soon after this slide. So for those who are new, I'd like to go over some of the basic terms. So this might be a repeat for some of you, but useful to those who are new. So ADA staking rewards is a reward that you get for staking. So you stake your ADA in the wallet. It allows the stake pool operator to participate in the lottery and gives the stake pool opportunity to mint more blocks. So for that, for staking, you receive rewards, and rewards come out of it's a combination of reserves and transaction fees. So as an ADA holder, you're entitled to those rewards if you're staking. So the reserves are ADA coins that have not yet been minted and have not yet entered circulation. Delegator is someone who assigns their right to stake pool operator to mine and mint ADA on their behalf. So to receive rewards on the Cardano blockchain, you can either run your own stake pool or you can delegate your ADA to a stake pool. And stake pool is a transaction validator that validates transactions, mints blocks, and the blocks are produced, and the stake pool and the operator and the delegator receives rewards. Epoch is a computing period of 5 days. So every 5 days, delegators receive rewards, and the blockchain pays out those rewards, which shrinks reserves and moves ADA from the reserves into the circulating supply. Slottery is a random lottery process where a slot leader is assigned, and when the pool that you're delegating to is chosen as a slot leader, that pool receives a reward, which means that you receive a reward based on your participation or how many ADA you have staked. And the block is just a batch of transactions that are recorded. So some of the main ADA stats, like I said, there's a hard cap of 45 billion. That's the maximum supply that there ever will be. The circulating supply is 71%, which is 32 billion ADA. There are about 12.8 billion in reserves and 23 billion are staked. So right now, 72% of all ADA is staked and receiving rewards and not on exchanges. So on the roadmap, we had just passed the Golden era. That's the one that empowers dApps and provides smart contracts capabilities. Now we've entered Basho, which is a scaling era where Hydra will be implemented, and then after that will be in Voltaire with a treasury system. So on the active address count, even though the price has slumped in the past couple of weeks, we still have consistent growth in active addresses. So we have about a peak somewhere in September, October, when we had the news about the smart contracts released and the Cardano summit, and we've had some declines since then, but Since yesterday, I've seen that the price has stabilized around $1.70 today. So I think we found our legs. All the speculators have left the market, and I personally think that the price will grow with the growth of the wallets in the coming months. So where do those rewards come from? Like I was saying, 75% come from reserves and 25% come from transaction fees. And from that block reward amount, 75% go to stake pools and delegators, and 25% go to the treasury. There's something called the catalyst, which is the tender where you can register and submit your project and request funding from the Cardano blockchain. And if your project wins in the voting process, where the delegators vote for projects to get funded, then your project can get funded from the treasury. So the treasury also gets funded from transaction fees and reserves. So with Bitcoin, this is a Bitcoin inflation rate. We have once in 4 years the halving event where the inflation rate drops because the halving event is basically the subsidy that's paid to miners for mining Bitcoin is cut in half. So in Cardano, this process happens every 5 days. One of the reasons why the opponents of the cyclical Bitcoin theory suggest that the cycles are ending is because the number of Bitcoin that's entering the everyday is dropping, and it becomes a smaller fraction of the overall Bitcoin in circulation. So with Cardano, you don't have that that same issue with rapid drop in new supply, because with Cardano, this happens every 5 days. So we have this constant annual inflation. Right now, the inflation is at 2.03%. And it's constant and it's gradual. So we don't have the same issue as we would have had with Bitcoin, where the sudden halving causes a cut in supply, and that has an impact on the market stability and the price. So I think that's one of the advantages that Cardano has, is this was designed with a foresight to mitigate that effect of the halving on the inflation rate. And this is the minted supply of Cardano. So right now we're 75% or close to 75% have been minted. And what that means, every year with this constant reduction in new ADA in circulation, the rewards are cut. You can see that in 2021, the overall rewards paid out will be 3.3 billion, and then in next year 2.1, and then in 2023 it will be almost half of what it is this year. But again, this is gradual, and this reduction happens every 5 days. So now is the best time for you to stake and earn rewards, because this means that the rewards that you will be receiving will be reduced every epoch, basically, and every year gradually the rewards will reduce in number. But what do you think that will do to dollar or euro denominated ADA value? As you have less ADA entering circulation, if we continue the growth of the wallets and the users on the blockchain, I think it will propel the price in US dollar terms significantly, especially when there is no doubt that the printing of US dollars and money by other central banks will accelerate. So this is the similar graph, this is the reserve. So currently we have about 12 billion ADA in reserves, and you can see that every year the number of ADA in reserves will be reduced. So in just 10 years, we're going to go from 12 billion in reserves to 1.5. So that's going to be the ADA that remains to be minted 10 years from now. So as this gradual reduction in reserves continues, there's less and less ADA entering circulation, but that reduction is gradual and it happens every 5 days. So for those who are new to this concept, how do you get rewards and how do you stake? So first you have to have the asset, you have to have ADA, so you have to purchase it. You can purchase ADA on Binance, Bittrex, or Coinbase. Those are the three biggest exchanges in the United States where you can purchase ADA. You purchase ADA with US dollars, and then you install the Dedos or Euro wallet, and you transfer from the exchange to your wallet. So one of the advantages of ADA is that you can self-custody it and you can stake it while you self-custody it. So you don't have to leave it on the exchange. So you reduce the risk of losing it. As long as you keep your wallet safe and you don't give anyone your key, then I know that Ethereum is looking to go to the same model where they will become deflationary essentially. So this is what the whole burning of the tokens on Ether is meant to do. It's meant to first start the burning of Ether with each transaction, and then the reduction of new Ether entering circulation. So it will eventually become deflationary due to the net use versus Ethereum that's entering circulation. But I don't know anything else that's structured in the same way. I mean, this is kind of the protocol is unique to Cardano, where you have this gradual decline. But I think it's a good question. I can look into it. So the question is there any other crypto asset that's modeled in a similar way, where the monetary policy is similar to this gradual decrease of reserves and decrease of rewards? So I don't know of any, but it's a good question. I will look for an answer and I will let you know. But I think the benefits are is you don't have, the Bitcoin has turned a lot of people away because of the volatility, and even Cardano versus Solana. I don't know a lot about Solana, unfortunately. I don't have Solana. I don't hold Solana. The one thing that I do know is that Solana the whole network has gone down twice, and then that's a disadvantage in my view. The network should be. Me as a systems and networking engineer. The system should be resilient enough when it's designed to prevent that from happening. But I also hear that Solana is mostly running on Amazon Web Services and highly centralized. So I don't know if that's true because I don't know a lot about Solana. I've done a lot of research about Cardano. Obviously, I know a fair amount, but I don't know a lot of specifics. Okay, someone says a lot more SOL is owned by creators. That's not very cool for a decentralized asset. And I agree. Poor token distribution. Yep. So one problem that they might find themselves in is when a project is highly centralized and the majority or a big portion of it is owned by owners, the SEC tends to go after those projects. One of the reasons why the SEC went after XRP, or one of the biggest projects, is because the founders owned like 50% of XRP. So that's one of the reasons why the SEC went after them. If you own a big chunk of the asset, it means that you are highly centralized and it looks more like a security. Because with a traditional stock, stocks and traditional stock markets, when a company issues stock, it holds the vast portion of it, or the initial investors, the angel investors, the VCs, the venture capitalists, funders of those projects, and the owners. They hold the majority of that asset because they are waiting for the price to appreciate so that they can sell it, and someone else is buying it in anticipation of that event happening. And that's the reason why that becomes more like a security. So I have heard that Solana has a lot of it, let's say a lot of the supply owned by the founders, and that's going to make it more susceptible to scrutiny by regulators. So I hope that makes an answer for you. So if you have started staking recently, or you have a question as far as why I haven't received my rewards yet, or how soon can I start receiving rewards after I stake, so N+1 is the first epoch when you start staking. Epoch N+1. So in the next epoch, then when 5 days passes, a snapshot is taken. So based on that snapshot, you will receive your first rewards. So in N+2, the second epoch, the blocks are produced, and then in epoch N+3, so the third epoch after you started to stake, rewards are calculated, and then in the fourth epoch, that's when you receive your first rewards. And then after the fourth epoch, the 20 days have passed, then as long as the pool is producing blocks, you will receive consistent rewards. Any questions on this? And then I have some new frequently asked questions. We have a FAQ, frequently asked questions, on the website, stakemyada.net. But I had some come in. Are the coins locked for any period of time? So that's a no. You can move ADA in and out of your wallet anytime. And if I buy more ADA and send it to my wallet, do I have to redelegate? So no, as long as you send ADA to the wallet that's already delegated, then at the next snapshot, the snapshot that's taken will account for the increased amount of ADA, and you will get rewards based on that amount. Yes, somebody's asking to go back to the steps page, so let me go back to this. So the steps are: you download and install the wallet, you send ADA from the exchange to your wallet, or if you're topping up, you can send additional ADA from the exchange to your wallet. And then once it makes it to your wallet, your wallet is installed and configured, and you have your recovery key. Then there's a delegation center you can go to, and you can select a stake pool to delegate to. I have a comment here. I've heard from whoever on podcasts that speculative investors look at what blockchain developers are most active on, which may explain why they like to use Solana, and they get paid more. So Cardano is #1 by GitHub commits. So there's more development on Cardano than anything else, than any other blockchain. But can I stake ADA on Coinbase? I don't know. I know that there was a partnership at some point between IOHK and Coinbase to allow staking on Coinbase, but I haven't used Coinbase for a long time. I know that they've enabled purchasing of ADA, but I don't know if you can stake it there. I do know, and I can tell you that Coinbase has been hacked a few times, and as recent as September, there was a loss of $2-something million. So exchanges get hacked periodically, and not even exchanges, but users get hacked periodically. There was recently a case with phishing emails where people have received emails that look like they came from Coinbase, asking users to log in through a link that they got, and it was actually a phishing email and it was fake, and they used their creds, and then the hackers used those same creds to access those same accounts and send funds from those accounts. So I try not to hold anything on exchanges if I can help it, unless it's some kind of a custody solution. So one of the benefits of staking ADA is that you have the control. So you have the control of ADA. As long as you don't lose your paper wallet with your recovery phrase, your ADA is safe. So don't lose that. And your wallet, when it's shut down, it's impossible to crack it because it's not running. So somebody would either need to have a running wallet, so access to your laptop and your spending password, or your recovery phrase. If they have one of those, then they can get to your funds and use, send them or use them. But as long as you keep those two things safe, then your ADA is safe. Is it safe to stake on exchange? I think it's less safe. So I don't do it, and I don't recommend it. But does Coinbase do it? I'm not sure. Cardano is a proof of stake a blockchain, which means that you get rewards based on your stake. So owning ADA cryptocurrency gives you a right to receive ADA from the reserves and receive rewards. So currently, this is the reserves. There's about 20 billion ADA in reserves. I'll answer that in a moment. So right now there's 20 billion ADA in reserves, though that ADA from reserves is slowly moving into circulating supply. So circulating supply is what's available right now, what's in the market. So right now in the market, we have 25% of that, or 32 billion ADA. That's out of that 32 billion ADA, 75% is staked. It means that it's in the wallet somewhere, and the wallet is delegating to a stake pool. Stake pool is using that ADA to process transactions. So as that ADA is flowing from reserves into rewards, the blockchain is paying out reserves to those rewards from reserves to those who stake. So owning ADA gives you a right to ADA from new supply, and that's what staking is. It's receiving ADA from the newly minted supply. So it's 75% from newly minted supply, 25% transaction fees that are collected. So does that help answer, or kind of basic explanation of what staking is?
Thanks.
So I have another question here. Can I stake ADA on Coinbase? We've answered that. Coinbase has a wallet, but I can't transfer ADA to it yet. So you'd need a wallet elsewhere. There, you have to enable sending in Coinbase. So they have this. You have to go through a process where you have to put a check mark somewhere in Coinbase to be able to send ADA from Coinbase. It's one of their safety things. So if you haven't done that, or you run into this problem, I've run into this with Coinbase users before, reach out to me, and I am happy to help you go through that. You can either reach out to me on LinkedIn or by email. It's admin@stakemyada.net. So if you send me a message, I will connect with you and I'll help you turn on the sending feature in Coinbase. It's very annoying, but I've run into this before. Hopefully this helps. So any more questions on the staking or reserves or rewards? You got it. So I have some updated ADA stats. So we had a spike in fees in October and September. You're welcome. Please come back anytime and reach out with questions. So the percentage of circulating supply is going up gradually. So we're at 75% now, and the inflation rate is dropping. So this inflation rate represents ADA that's being moved from reserves to rewards. And if you are staking your ADA or you're looking for a stake pool, look for a stake pool that is paying out rewards higher on average than this inflation rate. So if they're paying out rewards that's higher than this inflation rate, then they're doing better than an average. And there's actually a stat for that. So right now, we just crossed 2 million wallets in November. So this is all Cardano wallets. So in January, we were at 100,000. So it's a 20x growth in number of wallets. Out of those wallets, about half are delegating. So I could never figure out why. There's about half the wallets that are out there, but they're not delegating. And I actually know people that own ADA, but they don't delegate. And I could never figure out why. And when I ask them, they mumble and they can't make out an answer. But when you own ADA, you're entitled. It's your right to receive ADA from the newly minted supply. It's your right. And if you're not taking part in the staking, then you're giving that ADA away to somebody else. Because that means that if you own ADA and they own ADA, they stake and you don't, it means that you're giving up your right to them. So you're leaving money on the table for somebody else to grab it. So I could never figure out why that's the case, but the data clearly shows that that's the case. Average ADA per delegated wallet. So in January, there was about 160,000 ADA on average per delegated wallet. And right now it's come down to about between 25 and 30,000 somewhere. And the reason is because holders who've had ADA for a while, I know of quite a few people who have bought at 5 or 10 cents and they did it with borrowed money. So when it hit $2, they sold some to pay off their debt. So as long-term holders are selling a little bit to cover their cost bases, others are entering the market and buying that ADA. So that's why this average delegated per wallet is going down. Rewards. So you can see also with the inflation rate dropping, the rewards are dropping as well. And this is an answer as to why right now is the most beneficial time for you to stake. You will never earn more ADA staking than you're earning now. And in US dollar terms, when the prices go up, then rewards in US dollars go up, obviously. And when the prices go down, the rewards in US dollar terms go down as well. So we're also seeing fewer wallets staking. So we were close to like 57, 58% of wallets staking, but now we've gone down to 45%. And the reason why I think that that's happened, and it coincides with the smart contracts released in September and the Cardano summit. So the price of ADA was around $1 in June, and then it ran up to $3 in September. It was a highly traded asset, and traders were buying it in anticipation of the smart contracts release, in anticipation of the summit. Traders typically don't stake, so that's why the number and percentage of wallet staking has gone down in August, September, October. So we're going through this consolidation phase right now. The speculators have left and sold off their ADA, and the long-term holders are buying more ADA for their long-term holdings. So if you're concerned about the price dropping in the past month, don't be. It's a temporary thing that's going to consolidate and level itself off in the coming months. I actually think now is a good time to buy, because there's a lot of good progress and news happening in the coming months. There's a bunch of decentralized exchanges coming to Cardano. The stablecoin is coming to Cardano, and governance and Hydra are also coming. So let's see. Average delegators raw. So you can see average return on ADA dropped to 1.86%. So if you are in a pool that pays more than this, you're doing well. Total number of transactions. So we've gone up as high as 1.5 million, and right now we're at 700,000 transactions per epoch. But there has been steady growth in transactions, which means that more dApps and users are on this blockchain and using it. And you can also see this is a new metric that we haven't had before. So this is number of transactions over time with certain features turned on. So with native tokens, that was about in January. So native tokens are other coins that work on Cardano blockchain. So Cardano is a platform, and then you have other crypto assets such as coins that live on the Cardano blockchain. So for example, like Chainlink lives on Ethereum. So Chainlink is a native asset on Ethereum. So with we have growth here, spike of growth in transactions for native tokens, metadata, and then Pluto scripts is the pink one here. That's actually your smart contracts. So you can see that we have additional inflow of transactions in smart contracts. So there was one slide here that I wanted to go back to. I think I might have missed. This one. So again, about transactions, Cardano doubled the amount of transactions that Ethereum had in November, and it's second only to Bitcoin in transaction volume. So I think that has something to say about the use. And if you hear somebody say that, oh, Cardano has no uses and no dApps, you send them this this graph. But I think that's it. It's coming to an end here. I did want to point out that we do have this is our website, stakemyada.net. We have a page on LinkedIn for the pool, a YouTube channel where you can find some videos from previous meetings. And if you miss a meeting, then you can always find a video of it on our YouTube channel. So please subscribe. It's LEGA Systems is the name of the channel. We have a stats page on ADApools.org and on pooltool.io. And I was actually showing some of those. Go back to here. So this is our page on ADApools, and you can see the splash. So our return of ADA lifetime 3.3%, and in the past 30 days 2.14%. We have right now we have 62 delegators in the pool. 172 lifetime blocks. So how do we make money? How does the pool make money? For every 100 ADA that you make in delegator rewards, we keep 2. So we keep 2% of everything you make. And that's how we make our money. There's also a fixed cost of 340 ADA per epoch. So this is the cost that we collect to keep the servers running. So currently we have a block, a certificate server, and we have 6 transaction relay servers. We have 3 in the United States, 1 in Norway, 1 in Japan, and 1 in Germany. So we try to decentralize as much as possible. And how this helps us is when we mint a block, if we don't tell the rest of the network that we've minted a block fast enough, then someone else might take over that block. So as soon as the block is minted, if we're chosen as a slot leader, as soon as the block is minted, we want to tell the rest of the network about it. And that's the job of the relays. So the block server will tell the relays that Stake Pool LEGA just minted a block, and then information will propagate through the blockchain. So that's why we try to decentralize as much as possible. And this also gives us an opportunity to mint what's called an orphan block. So on the flip side of that, if there is a stake pool operator who's lagging and the performance is lagging on a stake pool that's a slot leader, then if we're listening on the blockchain for that information, and we know that the blockchain is waiting for them to complete a block, but they don't complete it in time, then we can pick up that orphan block. The key is that one of our relays has to listen for that traffic on the network and pick up that unfinished block, what's called an orphan block, and then we can finish that block. And that actually has happened a few times when we've gone through upgrades, when other pools don't upgrade fast enough, then we can pick up some orphan blocks. So that's why we try to decentralize as much as possible. So if you want to look at rewards, if you click on this rewards tab here, you can look at rewards of the pool. So it will give you per epoch reward in annual yield. And then in this rewards column here, after the rewards are calculated, you can see what the pool made and what the delegators made. So like 2 epochs ago in 304, pool made 374, and then delegators made 1,680. And then based on the number of blocks, so in this column, in the blocks column, you can see that in the epochs, when there are more blocks, then both pool and delegators make more. So in like when we had just one block here in 302, then pool made 346 and delegators make 300. But if you go to like an epoch here, 298, where we had 5 blocks, the pool made 400 and delegators made 3,000. So depending on your staked amount, you will receive an appropriate share of that. And we don't control how many blocks we get. There's a lottery process, and we don't control which delegator gets how many ADA as reward, because that's based on this lottery and based on your stake. So how much can you expect to make, or how much you made? So you can go here in the delegators tab, and you can sort either by amount, or you can sort by how early they were delegating. You can go to pick any random number, and we have a few that there's no minimum amount. I think minimum is like 5 ADA. We have some people that are staking, you can see 40, 50, 100 ADA, and then some with a few thousand. But if we pick like somebody in the mid-range, and I don't know who these people are, let's pick this person with 15,000 and see how far back they go and what they're making. So with 15,000 ADA, they have 66116, and this is an ADA. And then this epoch here, where we had 5 blocks, they made 10 ADA. So these payouts are happening every 5 days, and it's passive income for you if you're staking, and you don't really have to do anything other than stake your ADA. And as time goes by, this ADA is worth more in US dollar or other fiat terms, or we expect that it will be worth more. And if you keep that ADA in your wallet, then in the coming epochs, it will enable you to earn more ADA than if you move that out of your wallet. So there is an incentive on the network for delegators to keep their ADA in their wallet, because in the long term they will earn more in rewards. So that's how the stake pool economics work. So questions on this, or on the pool, on the rewards, on the stats, or anything else? Okay. So we do have a couple new pages on the website, and I wanted to just briefly show you. So this is stakemyada.net. There's a performance dashboard here where you can look up always the how the pool is doing, and the rewards and the blocks for the most recent epoch. And there's a about staking. We have the useful links. This is something that we've recently added. If you're looking for our social media like Instagram, LinkedIn, YouTube channel, or if you're looking for one of the stats pages like ADA pools or pool tool that I was showing tonight, then you can find them here. There is also a Cardano staking calculator. We have the link for it on our website. So here you can, if you delegate or if you're on a stake pool, you can put the amount of ADA that you want to stake, and it will give you an approximate reward. So you can use the calculator. Please put that steps page you had in your presentation on how to start the process on your page. We do have that on our webpage. So we actually have, if you go here, delegate to stake pool, there's a Daedalus here. So that's the name of the wallet. If you click here, it will give you a step-by-step instruction here on how to delegate with screenshots. And if you go to about Cardano and staking, one of these, I think in the home page we have right here, you have the delegation cycle on the page here. But if you have questions, if something is not answered, please reach out to me and I will be happy to answer your question. When you stake your ADA, what is the return rate on the 5-day payouts? Okay, good question. So the return depends on how much ADA you have staked and how many blocks are minted by the pool. So if we go back here and you pick any stake address. So this person here with they have 15,000 ADA. This is how much they received. So in Epoch 304, they received 5 ADA, or I'm sorry, 6 ADA. And then 303, 6 ADA. So let's look at how many blocks were minted in that epoch. If we go back to here, to the pool, and we click on rewards, it was 3 blocks right here in Epoch 304, 3 blocks in Epoch 303. So, and in each one of those epochs, the person with the 15,000 ADA, they made 6 ADA in rewards. So, and this is the return on ADA, 2.9%, 2.9% in those two epochs. And that's an annualized rate. So the return that they make depends on how many blocks the pool makes. And how many blocks the pool makes depends on the lottery process, which is a lottery that's run within the Cardano blockchain. So we don't have control over that. The only things that we have control over as stake pool operators is to keep running our servers and to keep them updated with the latest version of the ADA node software. Because if we don't run the latest version, then we can't run the pool anymore. We just can't process any transactions. So did I answer your question and was it clear? The question was, my understanding is, what's the return rate on the 5-day payout? Okay. All right. So any more questions? We only have a couple minutes left. I want to make sure if anyone has questions that I answer them. All right. We do run these delegator calls once a month now. So it's going to be first Thursday of January is the next one. If you would like for me to send an invite and you're not currently on my invite list, please reach out to me with your email address and I will be happy to send you an invite. But other than that, thank you for coming and thank you for asking good questions. I'm always happy to see participants and questions and discussions, and it makes these meetings better and more interesting. So I really do appreciate it. Yes, thank you for coming, and I'll see everyone again, hopefully in a month. All right, you're welcome, and have a good night.